Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. We are going to actually take a look at one we have looked at before on this video or on this channel, and it is one also in my portfolio. It is April 8th. We're going to take a look at Kroger Company. This is out of the consumer staple sector. Let's jump right in. And if you are new to the channel or you have just not done so already, if you could help me out, and it really does help out a small YouTube channel like me, whenever you hit that thumbs up button down below, hit the subscribe button, make sure you're subscribed to the Vested Interest channel, join us on this journey to financial freedom, and hit the notification bell so you're notified whenever we put out any new content. Again, doing that really does help out a small YouTube channel like me grow. And for those of you who have done that, really do appreciate that. Drop a comment down below. Let me know if Kroger is in your portfolio. Is it one you're watching? Is it one you're avoiding? Maybe it's one you're selling. Let me know. I'd love to hear from you in the comment section. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. It's also how I run through the stock pick of the day video. So we're going to run through this screener here. You can use this screener, just don't blindly copy it. This is set up more for me, and it does not mean just if it meets 5 of 8 or 6 of 9 does not necessarily mean that I am investing in the company. It just means it meets the initial screening process, and then I do more of a deep dive into the financials of the business, try to figure out what I'm willing to pay, and then wait for the company to come in line with that amount that I'm willing to pay, and then it possibly goes in. It's also how I look at a company that's already in my portfolio to back check and make sure that it still meets some of the criteria I have set. Now back to the video. We are talking about the Kroger Company, ticker the Kroger Company. If you want to know more about them, check them out at their homepage, www.thekrogercompany.com. That's www.thekrogerco.com. That is their homepage where I pull this information from. And they are a retailer. They are a grocery store chain, and they have many different brands underneath the Kroger umbrella. Staying true to our roots with nearly 2,800 stores in 35 states, so the majority of the country is probably shopping at a Kroger store, whether you realize it or not. Today ranks as one of the world's largest retailers, right? And their bread and butter is groceries. Right, so you can see here Dillon, City Market, Baker. So even though it might not say Kroger, the ones in my neighborhood, in my portion of the world here in Michigan, they do say Kroger, right? They're the Kroger companies. But again, a lot of other Food for Less, Foods Company, Fred Meyer Jewelers. So they do not just groceries, but that is their bread and butter. Fry's Food Stores, Gerb's, Home Chef, JC's, King Soopers, the Kroger, obviously, Kroger Personal Finance, again, so they do have other branches out there that don't deal in the grocery space, but that is their bread and butter. Mariano's, Metro Market, Payless, Pick and Save, QFC, Roundy's, Ralph's, Ryler, Smith's, The Little Clinic, Vita Coast. So these are all the different retailers that are under the Kroger brand. Now, the reason we're taking a look at them, down 3.39% on the day. We are talking about the Kroger Company, ticker KR, close out the day at $55.37. And you can see just pretty much a sell-off from about 10 a.m. on. 52-week range as low as $42.10, as high as $58.34. So they are closer to their 52-week high than their 52-week low. This is one I would really like to pull back more. It is in my portfolio, so we'll see my cost basis. I want this to pull back because I would like to continue to add. I got it to 100 shares, but I would like to build this one out a little bit more. Market cap of $39.96 billion, a beta of 0.48. So typically they are less volatile than the overall market, though there was a lot of volatility throughout today. Price to earnings ratio, PE ratio, $18.71 per share. Earnings per share, EPS, sitting at $2.96 per share. Earnings date is coming up sometime between June 13th and June 17th, so tune back in for that. For dividend, $1.16 paid out in the year. Divide by 4, though we'll see what that payment is per share here in a minute. Dividend yield of 2.02%, so it is a little lower than what I typically go through, but 2% is not egregiously so. I mean, if it was in the 1 or lower range, then it's one that I really take a pause on. But 2% or better, that's in my wheelhouse. That's why it's in my portfolio. Ex-dividend date, May 14th, so it is coming up here in the next month or so. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $57.95. So they see some upside, not a lot from where it currently sits, but some upside nonetheless. Now we're going to take a look at dividend yield theory. To do that, you'd go over here and look at statistics. If you were to go to Yahoo Finance, you'd find over here in this column over here, that's not shown. I clipped these out. So, and go to statistics, look at dividends and splits. Take a look at their 5-year dividend yield average. You compare it to its current 2.02, 2.02 over here, same number. And since it is lower, that speaks to some overvaluation on this one, slightly overvalued. And I agree. That's why I have not been adding to it. I want it to pull back some more, but it's getting close to fair valued. And if it pulls back a bit more, it would be undervalued, though I'd like it a little bit more of a margin of safety. Now, payout ratio is low, 37.16% on this one, so lots of room to increase that dividend over time, pay down debt, a lot of free cash flow room here, make acquisitions, reinvest back into the company. They do own a lot of their own locations or lease out space, so they do have those whenever they're opening a new space, construction costs that come along with that. Now, we're going to get into financials and look at free cash flow. We want growing dividends, and to get that, typically you're going to have growing free cash flow. If a company has growing free cash flow, typically those dividends will grow along with it. Going back to 2021, you can see here $3.9 billion in free cash flow. 2022, bit of a drop down to 3.5. 2023, even bigger drop to 1.4. 2024, back up to 2.8. So a little bit of a cyclical nature here. We're not done with 2024, obviously, so that number is not built out yet. But 2023, there definitely was a drop here, though they are looking at making some acquisitions. I don't know that those have been approved yet, so I think there was some free cash flow set aside for that. Now, you can also see they're repurchasing their own shares here. 2021, 1.3 million. So a bit of that drop from 2021 to 2022, they increased the amount of dividends or shares that they bought back, so that can be accounted for part of that decrease in free cash flow. 2023 was just down across the board. They decreases their repurchase of their shares as well as their free cash flow was down. But I believe there was a lot of free cash flow set aside for the acquisition that they're trying to get pushed through. And again, 2024, we're just not done with the year yet, so we'll have to tune back in and see what the final results are there. Now, stockanalysis.com is another site that I like. You pick any sites that you like. Just make sure you pick more than one so you can make sure the information you're getting is accurate and up to date. Here, they call it a consensus hold. The 11 analysts that they have a price estimate as low as $46, which would be a 6.92% decrease from where it currently sits. Average estimate of $54.82, which would be a 0.98% decrease from where it currently sits. And only if it hit their high of $64 estimate would you make any kind of money at 15.6% increase from where it currently sits. Now, I like 10% or better on return on equity and return on invested capital. Typically, return on equity here sitting at 19.5%, so beats the metric there. Though it is a little low on the return on invested capital, this is just the nature of the type of company that it is. Grocery stores typically do not have high returns on invested capital. Again, they have a lot of capital going back into build out new stores, remodel stores, open new stores. That is a lot of their capital goes out to that sort of thing. Earnings per share growth, I typically like 5% or better projected over the next 5 years. They're sitting at 14.27%. Very good numbers with a forecasted revenue growth of 2.64%. Again, very good numbers overall, except for the current price per share. Now here we'll go into my position real quick. I do have 100.585 shares, right? I am up 23.1% or $1,044. I would like it to pull back closer. I don't know it's going to get down to my cost basis of $44.91, but I would like it under $50 per share. 49, 48, I'd probably be interested in. Again, here at 55.30, I just feel like I'm holding. It's a little overvalued in my opinion. They are a quarterly payer. Low payout ratio, I think 37% is what we saw with Yahoo Finance. They're saying 39.19, so lower than what I typically like at 75%. Very high dividend growth, 11.54%. 17 years of dividend growth, 0.28% share buyback yield, and shareholder yield of 2.37%. Very good numbers overall. They do pay out in the March, June, September, December timeframe, paying 21 cents back in November 12, 2021. Jumped it up to August 2022 to 26 cents. Jumped it up August 23 to 29 cents, and they've kept it there so far. I would assume in August of this year we'll see another raise. Well, that is really it for this one. Again, really like Kroger. It is in my portfolio. Want to build this one out a little bit more. Wouldn't mind getting them to a couple hundred shares even in the portfolio, but want a bit of a bigger pullback. I'd like them back under $50. They got into the $49, $48 range. I would probably nibble and add a bit to it. Again, if they really pulled back below my cost basis, I would probably back up the truck and double up my position. But right now, waiting for more of a pullback to see where this one lands at. Hopefully they do continue to pull back and we can add some more here. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And if you have not started your own investing journey, let me know in the comment section down below. I'd like to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Kroger you'd like me to cover in the Stock Pick of the Day series, go ahead. I think I got a recent suggestion for Keurig, I believe is what it's called. And I will try to work that one into the rotation here over the next week or so. So again, if you have any suggestions, go ahead and work them down below. And that is it for this one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't manage to never invest any amount. Not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counselor or certified financial advisor.